What's up, guys? Welcome to Heresy Financial. This is the channel where we talk about anything financial in a way that's considered heresy to the industry. We cut through the noise. I'll give you actionable and real feedback on what's going on behind the scenes in a way that you're not going to get from the mainstream financial news sources. And so today what we're going to be doing, really quick, short video, just an update on what has been happening this week, because we are rounding out the week with a very volatile week on a little bit of an up note here. So we're going to dive in, look at some of the major news that happened this week, what that means, and how that might affect us going forward. Let's dive in. All right, first up this week is a little bit of an update on the repo market crisis. Reuters did an article that really flew under the radar. Not a lot of people talked about it, but they did some investigation as to who the culprit is behind the lack of liquidity in the repo market, causing the Fed to have to come in, print money out of thin air, and supply the overnight lending to that market. A lot of people initially speculated that it could be Deutsche Bank or some other European bank causing some of these issues. But the one key indicator that showed that it probably wasn't anything overseas was the LIBOR rate. If you're not familiar with LIBOR, it stands for London Interbank Offer Rate, and it's very similar to the Fed rate or the repo rate. It's just an overnight borrowing rate from London set in the European market. And so you did not see any real change in the LIBOR rate or any shock overseas when this started happening around the 17th and the 18th of September. However, obviously, we saw massive spikes in the overnight lending rate here in the States. And so that makes it seem as if it is something domestic and not something in Europe causing these problems. And so Reuters took a look at some of the information coming out of some of the banks. Well, JP Morgan Chase, the biggest player in the field, so massive, and they realized when they started digging that JP Morgan Chase has cut down on the amount of cash that they're loaning out by a significant amount. And because JP Morgan is so big, that was basically the blow that, in their view, the blow to the industry, the blow to the rate, the overnight lending rate there, because there was a massive amount of cash that historically was in the system that's not anymore. They say part of this is due to the fact that there's new regulations on how much cash banks have to keep, just in case there's something, some sort of bad scenario going on, kind of the stress testing limits. And so JP Morgan is holding back a lot more of their cash instead of lending it. And that may be true. It may be just due to this, due to JP Morgan cutting down on how much cash they're lending out. But to me, that seems like something that would have been a lot slower developing and wouldn't have happened all at once overnight, causing such a big snap in the market that, and even if it was that, why is it pursuing? Why is it continuing? I'm sorry, not pursuing. Why is it persisting, and why is it continuing? It doesn't seem like JP Morgan doing that should have been something that caused such a big spike at first, and then it led to this continuing repo market operation that the Fed has said they are going to continue until October 10th. And so we'll see. That is coming next week on Thursday. I believe next Thursday is the 10th. And so we'll see if they actually stop. I think there's a fairly good chance that they don't actually stop. They use this as an excuse because they need inflation. With the amount of debt, the size of their balance sheet, they need every excuse they can get in order to push the printing of money and the creation of money, the lowering of interest rates, causing inflation. It's their only tool that they have left, and it's the only thing that they can do to keep on kicking this can down the road. So I think they'll find some other reason to continue doing this. It's a matter of time, though, about 1 week until we see. All right, on to the next thing. The next thing that we have happening in the market that, again, not a whole lot of people were talking about was the continued attacks on Saudi Arabia. Everybody talked about the first one where it crippled their oil supply, but nobody actually talked about the fact that the Houthis actually took credit for that first attack. Everybody thought the Houthis were kind of this ragtag little group that didn't really have any sophisticated methods or technologies or wartime strategies, but they took credit for that first one, and they've since attacked at least twice more, and could be 3 times more, because there was an explosion shown at one of their train stations. There was an airport attack, and then one of Saudi Arabia's military regiments was actually attacked near the border, and it looks like they might actually now be maintaining part of Saudi Arabia's land, and they might have moved in and are not giving that back. They've kind of occupied that space. And so we're seeing something that's really, really interesting here, because there's this group that technologically and money-wise and sophistication-wise, they do not match Saudi Arabia. They have nowhere near the money, the skills, the military, anything like that. But they're using what's called asymmetrical warfare. And basically, asymmetrical warfare means that I can use technology that is very cheap to take out your technology that is very expensive. And so the military systems that Saudi Arabia is putting into place and that America is supplying to them for their defense are very, very expensive. And it seems as if the Houthis are using much cheaper, inferior technology to kind of take this out slowly and little by little here. So with this asymmetrical warfare, it's very hard to defend against, because you can have a drone that costs a couple $100 or a couple $1,000 be taking out military technology that costs millions of dollars. And so at this point, it's not looking good for Saudi Arabia, and that's even a little bit of a blow against the American military ego, because they're using mostly American-made defense systems here. So at this point, we'll see if it actually turns into a big deal, but they've shown they have the capabilities to attack, to gather really good intel, to get in where they shouldn't be, and use this to take out far superior weaponry. And so we'll see if this escalates and turns into anything bigger. Speaking of military tensions, the Hong Kong-China escalation has been moving along. They are continuing their protests, the laws, the regulations, the police moving in. It's all ramping up. It's still increasing. It's not fizzling out. Doesn't look like it's going to fizzle out anytime soon. And we're still on the Golden Week in China. That's their holiday week that they have every year. And the president of China, Xi Jinping, he basically said there's no force that can stop China, probably alluding to America. He said that they're continuing with moving forward with their goal of the reunification of all of real China. And what that means is that he basically thinks that Taiwan and Hong Kong will eventually be fully integrated. Right now, they've been operating under this 2 systems, 1 country, and he did reiterate that, but you can see in kind of how things are progressing that it looks as if he really believes, and a lot of Chinese people really believe, that all of Asia belongs to China. And they showed off these new fancy missiles that they have, and at the current pace of their growth, militarily even, they are currently on pace to kind of grow their military past the strength of the U.S. In the next couple of years, 5 to 10 years, depending on how things play out. And so that's a really interesting development. Again, we'll see if the thing in Hong Kong fizzles out, but it could be one of those things that kind of pushes that snowball rolling down the hill, little pin that pricks the bubble. We'll see, but those tensions are still rising. Now, we had, in the last week, we've had some data come out. Our manufacturing data came out, and it's the worst that it's been since 2009, on the tail end of one of the worst recessions we've had in modern history. And that was, it's expected. Yeah, manufacturing should be bad back then. It shouldn't be bad right now, but it is bad. And so it looks as if, because the same type of data is coming out from Germany, I think Switzerland too, China, they're slowing down. And so it looks as if the recession has probably already begun, and it is just making itself known first in manufacturing. The services, the non-manufacturing data came out a couple of days ago, and it too was far below expectations. It wasn't as bad as the manufacturing data, but the trend is in the wrong direction. It's going down, not up. and it's still the worst numbers that we've had in the last few years. And it was far below expectations. We were looking for a beat and we missed by a lot. And so the numbers that are coming out aren't too good. We also had the jobs data come out, which did look good, but nobody talked about this. The jobs data has been manipulated. If you look at the jobs report for last year, they basically had to revise it downwards by 500,000 jobs. That means a lot of the months that they reported good jobs growth were actually negative. And so for the jobs data, we're just going to have to wait and see if that stays the way it is, or if they manipulated that as well for this month and have to kind of revise that downwards as well, because the government want the people that put together these stats, they want them to look good because that allows them to continue pushing forward with what they're pushing forward with. Again, mostly coming from the Federal Reserve there. And so they are probably going to have to revise these numbers down. But it actually kind of led to some paradoxical market movement, because amid all of the bad news and the tensions rising and the data coming out, the stock market started to drop. And so then everybody realized, hey, because of the global trade tensions and because of the bad data, there's a very good chance that the Fed will lower rates next month or this month. And so because of the rate cuts being now expected, they're pricing that into the market. The stock market rallied. And if you, again, I've said this before, but if you want a kind of a good example of what that means to have something priced into the market, imagine if a favorite store of yours announces that next week everything's going to go on sale by 50%. You're not going to go to that store this week and buy anything at full price when you know you can wait 1 week, buy it all on sale. But if you're in the store, you might say, hey, next week this is going to be half the price. Just give me that half the price now. And the cashier will know they're not going to get any business for this week. So he'll say, yeah, sure, of course, because we're going to honor that price next week. Why not give you that price this week? Otherwise, you're not going to buy it right now. So might as well do it right now. So that's how the market prices things in. Since the future expectation is going to be priced into the present, they have factored in an expectation that the interest rates will be cut, just expecting that the Fed is going to come to the rescue again, make money cheap and easy, lower rates, and try and stimulate the economy even further. So paradoxically, because we had all this bad news, the market went up because we're expecting some more shots of morphine, if you will. So some more symptoms started showing up in the economic body, and so we're expecting the doctor is going to give us some more morphine. And so we feel good. We feel like that means the disease is not here. Obviously, that's foolish. This is just kicking the can down the road a little bit more and making the problem and the eventual fallout worse when it actually does start crashing down. So that is the kind of the conclusion to the the market news that we had this week. We didn't really end the market going down that much. Might have actually ended a little bit positive. I didn't check the final closing numbers for the day, but overall it was volatile, ended pretty flat. And we're just going to have to wait and see what the Federal Reserve does, because they're kind of driving the cart before the horse, if you will. And we're going to see how this all shakes out when we finally get pretty close to the cliff here. So that's all I have for today. Hope you enjoyed it. Stay tuned for the next updates, and like and subscribe. Help a small channel out and share the video if you enjoyed it. Thanks so much for watching. You guys have a great day. Thank you so much for watching. I really hope you enjoyed the content. I try and put out as much content as I can, especially whenever there is something new happening in the market. Please like and subscribe. And if you want more, if you need a step-by-step plan in order to prepare for the coming financial crash, I did write a book. It is on Amazon. You can buy the Kindle version or the paperback. It's called Financial Heresy. You can also find it on my website at heresy.financial, but it's easiest if you just go to Amazon. You can again get the Kindle or the paperback. It's called Financial Heresy. Thank you so much again for watching. Please like and subscribe and share. You guys have a great day.